Hello, everyone. My name is Chris Kimble with Kimble Charting Solutions, and I want to welcome you to another edition of your Daily Five. Today's October the 28th, and let me wish you a happy early Halloween. May you have a spooky and great time. And kind of speaking of Halloween, I always kind of think of holidays and seasons. And so today I want to kind of talk about some seasonality, and that natural gas is smelling sweet of late with this strong rally. Kind of want to talk about when we talked about seasons. I want to talk today and look back on a chart that we shared 60 days ago on the benefits of combining price and seasonal trends. What would you do with Natty now if you own it? I want to compare Natty and crude prices. Coffee's really been perking up. I want to look at its pattern and its seasonal trends and why the Hang Seng Index in China, in my opinion, is going to be so important to your stock holdings around the world, globally, and in the States. So let's go ahead and get started here. And this is a chart I shared on September the 2nd. So it's hard to believe that's essentially 2 months ago when we finish up this week. And this was a combination chart. UNG has not smelled very good from a performance perspective. Currently, when we did this chart, it was around $16 a share. And this thing has done so poorly that they've even had to do reverse splits on it. But I did a combination chart. This is the seasonality from sentimenttrader.com. Been a member for years, a great site on seasonality studies and many other things. But the thing that I highlighted is this is the seasonal trend. And this green bar window just reflected that historically, it doesn't hit it exactly, year after year. But historically, Natty Gas has averaged around a 16% gain in 30 days. And so I wanted to kind of look back and talk to you about and just kind of share how this can be a really magical combination of using price and channel and resistance. You'll notice that UNG had been doing poorly for a long time, but now for the first time in a while, it's above short and long-term 50 and 200-day moving average. Its relative strength is strong. The seasonal period was here. And so what's happened since then? So this looks back on performance since that chart was made on Natty Gas. And so it compares Natty Gas, which is up, UNG itself is up 27% in 60 days. Commodities in general, I wanted to share this because if you'd been long DBC, which is, a basket of commodities, you'd had a good 60-day window up around 12%. But you can see that the combination of the pattern and the seasonality that Natty Gas, was almost over doubled that same performance. And in the same time frame, the S&P didn't have much to brag about. It was up a whopping 0.49%. So essentially just flat over the last 60 days. And so I wanted to update you kind of where we are now. That was what's happened in the last 60 days. So here's the current seasonality trend. So on average, around the 210th day of the year, that's when Natty Gas tends to peak out. You can see this is when we did the chart, and here's this big, move up. And you can see that on average, Natty is kind of flat in November, but it's the months after that I want you to pay attention to, of December, January, and February are all traditionally down. So around 5%, around 5% and 2%. So down around 12% from December through the end of February. So here's the chart that I want you to really be aware of on Natty Gas. It's, to me, of all the charts that I've looked at, thousands over the last 40 years, this is a rare one as far as of this. This is a monthly chart. This resistance in 2009 was pegged again in 13, came near it again in 2018, and now we're back at it. But the thing that intrigues me is if we'd have a breakout above this, just call it a $6 level, where's the next resistance level? Is it really up here at this double top at 14? So I want you to be aware of a couple of things. One is if we get a monthly close and a breakout here, this could just be a monster rally. It could be really painful to people during the winter heating season. And we discussed this on the last Daily Five. But I also want you to, as we're finishing up the month, what do we got? A couple of more days left. Is this a monthly hanging man pattern right at 12-year resistance? You know, it could be. So we're really at a critical level in Natty gas. And so this is typically, when you see this kind of a pattern, obviously the month is not over yet. This is, for most times, historically, is actually a sell signal up against resistance. So Natty and crude have some parallels, that they're both facing long-term resistance at the same time. If you're long Natty, this would suggest, excuse me, we'll go back one. If you're long now, you get two moves to be looking at harvesting some gains or bringing some stops up, you know, right here. So I would at least do the latter if you've been long, you know, Natty. If you don't own Natty, I wouldn't be a buyer here until there happens to be a breakout. And if there is a breakout, hang on, because it could be pretty powerful. So we saw that Natty typically peaks around this time of year. What about commodities in general? So this is the CRB index, and you can see the weakest time window of the year is typically October and November. And you can see that it typically bottoms somewhere just a little bit before Christmas. And then traditionally its seasonal window is strong for the first 6 months of the year. So another one that I wanted to highlight that we've discussed several times is coffee. So this chart was done on 7/21, just a little bit over a couple of months ago, and we were presenting this pattern. We've been presenting this overall pattern on your daily 5 and to our members for almost 2 years, and it represented that coffee, when it broke out of these long-term multi-year falling channels, its average gain over the last 40 years was 140% over the next 2 years. And so we saw a breakout here in 2019 and 20. But in July, on July 21st, we said if coffee would break here, the odds are that it's going to rally another 25%. So let's update the chart and see what's happened. So since then, if we just looked at the coffee ETF over the last 90 days, it's up 32%. The DBC, the commodities, is up 13, and the S&P is up 5. So here's another example of probably a couple of products that a lot of us use in our lives. You drink coffee this morning, happen to heat your house this time of year with Natty gas. These are profitable places. And so to update you, coffee is now testing the 2014 high. It's 61% retracement level with relative momentum extremely high. And so we're booking our gains on coffee right here, but I would be a buyer back into coffee should it take out the 2014, you know, highs. So coffee seasonality, I want you to be aware that the December month is its best month of the year with an average gain of about 5%, you know, that's coming up. So if we would get an upside breakout, be aware of that. So one ratio that's really stunted it up, as we're going to wrap up the last couple of charts here, is this is the Hang Seng, China index to the S&P. And so you can see when this index is going down, it just means that China and the Hang Seng index is underperforming the S&P. And I wanted to show you this chart because this is a monthly chart looking back 30 years, and we're at 30-year lows as we speak. So someday this underperformance, this worm could turn. So I want to kind of let you know how much a disparity has been over since 2008. The Hang Seng is still underwater. It's down 10% from 14 years ago, while the S&P is up 200% in that same 14-year time frame. So a big disparity. And I wanted to show you these charts on how critical I believe the Hang Seng index, despite its really poor underperformance and being underwater a decade and a half later. This is what I want you to pay attention to. This goes back to pre-2000s, 1998. So we have a really long-term support line here and the bottom of this trading range. Potential double top in the Hang Seng, but this is supported. Every time this has been hit since 1998, it's been a buying opportunity. And so I wanted you to see the FXI. It's the largest, I believe, ETF that invested in China out there. It's testing dual support as here that goes clear back to 2005. So to me, I think you should really stay focused on this support line here, because I really believe it's going to send a critical ripple out message to stocks, not only in China, but in Europe and also, the States. So as we wrap it up, Natty gas has done extremely well. You can see there's really benefits in combining the seasonal and support. We've done really well on those trades. You can see that coffee's up against resistance. And I just kind of wanted to just remind you folks that there are these plays out here that maybe aren't mainstream, but can really, you can see both of these trades that we just highlighted today with coffee and Natty Gas have far exceeded the S&P over just the last couple of months, but also even year to date, doing extremely well. So thank you for attending. We do offer a 40% discount for StockChart members. You can receive this discount by going to kimblechartingsolutions.com/StockCharts. Thank you, everyone. Take care. Happy Halloween.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.